Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems from the digital study guide, the short exercises for Chapter 6, and we stopped on number 11. So each of the following situations has an internal control weakness. Identify the missing internal control in each situation. Answers should include authorization, documentation, and separation of duties. Identify the possible problem caused by each control weakness. Answers should include theft and financial loss. Propose a solution to each internal control system. So let's see here. So the missing internal control, we have three choices: authorization, we have documentation, and we have separation of duties. And then um, identify the possible problem caused by each control weakness. So the control weakness would be theft and financial loss. Okay. So, and then propose a solution to each internal control problem. All right. So number one, Crystal Lund has been your trusted employee for 25 years. She performs all cash handling and accounting duties. Okay, right there. She performs all cash handling. There's no separation of duty there. Um, Crystal just purchased a new Lexus and a new home in an expensive suburb. That's uh, as an owner of the company, you wonder how she can afford these luxuries because you pay her only $42,000 a year and she has no sources of outside income. So that's creating pressure on her, right? I mean, is it possible that her spouse is makes a buku money? Yeah, sure. Um, but let's say she's a single parent with three kids. 42 grand. You don't live on, buy a new home in an expensive suburb and drive a Lexus on 42 grand a year. So her performing all of her cash handling duties, that's a separation of duties. All right, that's the internal control. The pressure that's being caused to pay for the Lexus and the new home, that can create the control weakness would create an opportunity for theft. And of course, the possible solution, proposed solution for the problem is to separate, create a separation of duty, not just have Crystal handle all of the cash. Maybe the owner and Crystal handles all of the cash, okay? Or hire somebody else or have a different employee also handle the cash so that there's just, she's not the only one who can just walk off with it. All right, B, standard Sanchez Hardwoods allows its sales staff to grant credit to any customer. As a result, it has had several large write-offs in accounts receivable recently. Okay, you don't allow your staff to grant credit to anyone. All right, that's you know that's not giving proper authorization. You don't just have anyone grant anything. All right, that's not getting correct authorization. Um, that allows for large write-offs, which is a financial loss. Okay, uh, because why? If they grant credit to anybody and they have poor credit, they're walking out. I mean, think about your credit cards. They're, I mean, the banks, they want, and this is kind of like this idea just popped into my head. I mean, you're constantly being bombarded with, um, applications for visas and MasterCards and so on and so forth, and, by multiple banks. And especially when you're young, they want to get you hooked. So you get this credit card and you run out and, who's giving the proper authorization? They're giving authorization for anybody to, have one. Um, and then what ends up happening is the person, uh, you know, charges up to the credit card and they can't afford it, and then they start missing their payments, and uh, all of a sudden they can't pay for it, and now they have to take a loss on it. Now, in the idea of credit cards, they're making so much money on the interest that it covers this loss. But that's an example another example of this type of thing. If my sales staff is just granting authorization, giving credit left and right without doing credit checks, if I'm not covering that by the amount of interest that I'm retaining or getting back, I mean, it's that risk reward kind of thing. If I'm not able to get back more, then I'm going to take a beating. Another idea just came into my mind where there's a car lot that, if you have a paycheck, you can buy a car. Okay. And yeah, they get a lot of people in there who have bad credit, but when they go to buy a car, I mean, interest rates right now are, 2 and 3%. They're charging 28, 30%. Okay. And they're able to stay in business because of they're able to cover themselves with the high amount of interest that they're charging the customer. So, but in this case here, there should be a system set up for proper authorization, and there should be proper channels. So the sales staff would go to a sales manager or a financial manager, who then can run a credit check in order to make sure that the people are credit worthy. This way they don't have write-offs in their accounts receivable. All right, C, the office supply company where Power Sporting Goods purchases its business forms recently notified Powers that its documents were no longer going to be pre-numbered. Okay, no longer going to be pre-numbered. Okay, that is documentation. Right. Invoices, their business forms have to be pre-numbered. Bill Powers replied that he never uses the receipt numbers anyway. Okay. Well, by not having pre-numbered forms, that allows for theft. Okay. Because missing invoices, if think about it. If let's say I have 3 invoices, okay, and this one is legitimate, but somebody comes and they buy something from this one here from 101, and we also see 102, so 101 goes missing. Okay, well, I know that's missing, and I want to know why. Okay, and that helps prevent theft, right? Because they know that they're going to be coming and looking for where's this invoice, all right? And if you're stealing from me and tearing up the invoice, I'm going to know about this, and you're not going to have a job, okay? Whereas if you have no numbers whatsoever, it, you have no control. Period. It's just that simple. Anybody can take an invoice, and who's to say whose invoices is whose, right? And so that just creates additional opportunity for theft. Let alone the invoice just being tossed away and not being able to trace it. You need to have a paper trail. Part of that paper trail is the numbering of documentations. So the way you get over that is by ordering the pre-numbered ones. And the owner saying that he never uses receipt numbers anyway, that's also a lack of control on his part. He has an issue that he's just asking to be stolen from. Okay. Now he may be doing that for himself because he wants to reduce his tax liability. But there's auditors come in. There's ways to find know that embezzlement is going on and fraud is going on, even if you don't have the receipts, because things have to match up. There's in accounting, there's something called the matching principle, where you match your revenues with your expenses, and it's we end up as accountants, we take a whole semester for one subject on auditing, and there's percentages and statistics and different kinds of measures and procedures that we can apply in order to be able to tell whether or not something is going on. So by having this excuse, I don't use receipts anyway, it can be quantified and know that as an owner you're actually embezzling and therefore not paying your taxes properly. So don't even get involved with it. Just make sure that you have numbers on all your documentation. Okay, and D, Store discounts such as Target, discount stores such as Target make most of their sales in cash, with the remainder in credit card sales. To reduce expenses, one store manager allows the cashiers to record sales in the accounting records. Okay, the store manager allowing the cashier to record the sales in the accounting records. So they're making the sale, the cashier is making the sale, and they're recording in the records. Okay, that's a separation of duties. All right, because if they take in the sale for $100 and they record it in the record for 80, they're just pocketing 20. There's no separation of duties. The cashier would make the sale, but the store manager should record the sale. Okay, so theft can occur, and the way to get around that is make sure that more than one person handles the material. Okay. All right, so that's it for number 11, and I will see you in the next video for number 12.